All right, welcome to the daily recap of oh shit of the 12th of December. I prepared sorry um I prepared the recap a little bit because I'm not trading this week. I'm just doing the recaps because I'm on holiday. So I'll prepare it a little bit so I can go faster to it because I don't want to sit there 20 minutes spending on the recap while my friends are sitting downstairs. So what happened? Weekly open over here. We stayed inside the daily range, previous daily high, previous daily low, previous weekly low, previous weekly high. Stayed inside the range. And then coming in today, what can we see? Ooh, you can see the slowdown here during Asia. We react from, we have this bullish range going on. We have liquidity to the upside in the form of previous daily highs and previous weekly highs. A London high over here. We had a New York high over here. So, lining that up with this bullish structure that's going on, we can expect price to come higher. Then last Friday, we had this spike into the deep discount, reacting from a 1 minute fair value gap. Then Asia, what can we see? We can see that we slow down over here. Impulse down, another impulse, and then immediately slow down at around 2 a.m. Price slowly starting to turn around, but very low volume. Not a lot of movement. Then what happens in Asia? We form this structure. So this is weekly open over here. And then here we've got the, oh, actually, this is a wrong break of structure. No, it's not. I just took the wrong one. This is the right one. So we have this 5 minute break of structure. It's a bit tricky with this range because you can see that this range never reached discount. But we have this 5 minute break of structure that's just indicating like, okay, we might turn bullish and then maybe turn around, take H lows, take previous daily lows. But then what happens over here? We get another 5 minute break of structure. Then so one, we first of all we reach the deep discount. Then we get the tap or price coming into this 1 minute a mitigated block, or it's a wick, but yeah. Then we get a 5 minute break of structure. Then going down lower. There you go. You can see it clearly. Look at this, super clean PA. So first, 5 minute break of structure. Then secondly, we form early buyers. Why? We got this high that leads to new low. That one gets taken out and then price comes lower. So early buyers. By forming the early buyers, we make equal highs. We build up liquidity to the downside above our 5 minute order block. Then price comes down, taps into the 5 minute order block. Then we get the 1 minute break of structure. We build up more liquidity to the upside. Like we got, you can maybe make this as a trend line. We got liquidity building up above our extreme 1 minute order block. And then you get the entry, and 1 to 5 is hit at the early buyer top over here and at the liquidity over here. Then the potential or target can be Asia high. It's a 1 to 13 risk to reward, and targeting these New York highs over here could be like your final target, 1 to 28. So let's take this off. Negative of this trade is, like I said, like it's only this break of structure, and you could maybe say like, okay, we got the high, low, lower high, lower low, lower high, and then this is only a first point where we reach discount. So that makes it a bit hard that this is the last point. But then because we follow the order flow and we get the full entry drill, we can take the trade. Another thing is that we have previous weekly lows, previous daily lows, and Asia low to the downside. So we trade inside the Asian range. But yeah, that's a risk we want to take. That's that's a risk we should take. Also, what's really remarkable is that we stay inside the daily, the daily candle. It's remarkable because like slow volume during December. So yeah, it's like, yeah, it's pretty interesting. Yeah, you can see that I've seen it many times this month that we just stay inside the range or inside the candles. Um, what else happened today? So then we take out Asia highs, price wicks down, inducing more sellers, and it continues up. Then coming into pre-New York, we got the first bearish break of structure, turning bullish. So this is our early sellers. And going down lower, what can we see? Our early sellers taken out. Then we got low, high, higher, low, higher, high, minor break of structure. And we got our entry. However, this is against the how do you say that? This is counter trend because following our 5-minute range or 5-minute range, following this range, we expect price to take out these highs right now, following this range. So like this short is really just a 1 to 5 and then you stop. So short 1 to 5 and it's a clean trade during New York Open. Stops above the high, 2.4, 2.9. And again, 1 to 5 is hit pretty easily, pretty quickly. Then this becomes early sellers again. Why can we call this early sellers again? Because we come above this high that led to a new low, and then we break bearish again. So this is another form of early sellers. And no entry drill presented after that. So two trades today. Mm-hmm. Oh, wait, let me just zoom in. This one gets taken, this one gets taken. Then another thing is maybe get this high, low up to this high, then this one reaches. Again, it's not like it's really minor breaks today that gave the trades, but it's good to take notice of that. So, yeah, because like this could be the reach of discount. However, this is just a random low that leads to a high, and this high doesn't break any highs up here. So really, you could have taken this straight, and either you could also like target the 50%, go break even over here, and then get me like low, high, higher low, higher high, then bearish break over here, and then bullish break again, and then target the discount of the leg, of this leg. So yeah, those are the two trades for today. What else can we cover? What can we expect now? So this was correctional. Then we got the impulse during London. Daily cycle wise, not really daily cycle. London pushed price higher, New York is pushing price lower. Took some internal highs. Still got liquidity here to the downside. So yeah. So the trade entry drill was clean. Same over here. But price action, there's so much going on in my opinion. You get this range, then you're forming more internal ranges and just like it's getting all spread out. So every time you have to make new ranges, so that's a bit tricky. I think in January we can see a better price action again. So yeah, this was the daily recap, bit messy, but just like price action this month. Good luck with it.